G'day folks, welcome back to another update for gold and silver. Now both instruments have hit resistance recently and a bit of a pullback from those areas. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, in terms of the outlook, as of today, February 26, gold and silver prices. Gold prices recently reached a record high of $29.54 per ounce, but have since eased to $29.37 due to profit taking and concerns over US President Donald Trump's proposed tariffs, which may lead to inflation and a global trade war. Silver prices have similarly declined by 0.4%, settling at $32.88 per ounce. In terms of market influences, the proposed tariffs on imports from Canada and Mexico, set to take effect March 4th, have created market uncertainty, prompting investors to secure profits from recent gains. Additionally, the US Federal Reserve is expected to respond to potential inflation and labour market changes, with investors closely monitoring upcoming economic reports for further insights. In terms of the outlook, despite the recent downturn, demand for gold and silver remains strong amid ongoing tariff uncertainties and geopolitical tensions. Analysts suggest that if current momentum continues, silver could challenge the $35 level. So we always start the long-term trends, so with the monthly, the weekly and the daily. So for those new to the channel, we've got these moving averages. And the prices are above those moving averages on both the price and the CCI 150. It's also bullish, giving us a bullish signal. So bullish on the monthly. On the weekly, however, even though they were still bullish on the above the CCI and the price moving averages, notice it's already responded to this longer term bearish divergence. We had lower highs on the CCI versus higher highs on the price, and that actually came down and hit our minimum target range, which is this 23.38% level. And again, let me just draw it for those new to the channel. So we take it back to that significant low back there. And that was a 23.38% level retrace. You can see there it bounced in there for a while and finally bounced out of there. So currently we're still in a bit of an upswing, but notice both the price and the CCI is actually trending down slightly on the weekly. If we go to the daily chart, we did actually hit this major resistance up here at 34.87, broke down, then it finally broke up and hit this previous resistance and current resistance at 33.40, minor resistance. It's actually broken down below the moving averages and also the CCI 150. So again, bearish outlook at the moment on the daily. Now if you're trading on whatever time frame you're trading on, so if you're trading on the daily, we always go in the direction of the weekly. So only go long when the weekly is bullish, and you go long when the daily is also bullish. And the same applies for the lower time frame. So if we go to the intraday charts, this is the hourly chart, we trade in the direction of the daily. And if the daily is at the moment going short, both the price and the CCI broken below the moving averages, then we take short trades. And the latest trade you would have taken would have been back here when the CCI broke below the moving averages at that point there, which was by the close of that candle on that hour. And you would have closed it out when the CCI broke into that moving average range on the close of that candle there. And that was a 1.1% gain in 13 hours of trade. Avoid going long because the daily is still in a shorting environment. So again, either wait for this to break down to a shorting position, or alternatively, if this keeps rising, we want to see the daily also rise higher than those moving averages. So looking at the gold price on the monthly, the price is well above the moving averages. There's no CCI for it, so a very strong bullish movement on the monthly. On the weekly, we did have this bearish, and it looks like it's still in play actually, the long-term bearish divergence, lower highs on the CCI versus higher highs on the price. Now for this to invalidate, we'd want to see the CCI rise higher than that previous high, in which case it'll invalidate the divergence. But at the moment, we expect a pullback at some point. And if we draw a Fibonacci retrace, assuming it pulls back from where it is at the moment, we take it back to that significant low there. And that'll be our initial target area. Now, I'm not going to keep this target in there for now because I'd like to see this break further to the downside in line with the CCI also breaking further. So this may have further upside to go possibly. So we'll take it one day at a time. But that's how you would measure the retrace once it peaks out. At the moment, it's still potentially got more upside to go. That's on the weekly. On the daily, now we did have this previous hard resistance at 29.42. Now I'm going to move that to those new highs there, and I'm also going to move that. We had this previous trend line. That's also showing a bearish, zoom out, a long-term bearish divergence, lower highs on the CCI versus higher highs on the price. These divergences are independent from different time frames. So you look at them in isolation, and you can see there the CCI is already broken down below the moving averages on the CCI, and the price has yet to make any significant break to the downside yet. For this to start working, I'd like to see this break below this moving average. And then if I was to measure this, I'd take a Fibonacci from that high down to that low. That'll be similar outlook to what the weekly shows, but again, that's just coincidence. They don't always align this way. And if I was to draw a target area, and I'll draw this one, that's the minimum I expect it to break down to. More than 90% of the time it hits this minimum retrace. Sometimes it goes a lot further. Other times it bounces out of that and makes further upside. And if it does that, and then we see a CCI rising and the price rising from there, then we're going to consider that a bullish move and expect it to break this previous resistance. But at the moment, we might see a bit of a retrace to the downside on the daily. Now, if you're trading on the intraday, we go to the intraday chart. Again, we only trade in the direction of the daily, so you take short positions only. So this one would have been probably a loss if you got into this trade there. Now, what you can do with some of these, it depends where you put your stop loss. So generally, I enter the trade when the CCI breaks below the moving average range. So that would have been an entry there, and that would have closed out when the CCI breaks into that moving average there. So that would have been a loss because that went against you. But it depends where you put your stop loss. So you can actually put it above the top of the moving average range. You can see there it actually didn't break that moving average range on the top side. So what you could have done in this case, you could have placed a sell order or a short position at the close of that candle. The CCI kept going. Now you could have closed out the first one there on that one. That would have been a small loss. Or, as I said, you could have put your stop loss above that red line, above the CCI moving averages. Let it go. You still have the position open. Touched it again there. Now you could have taken a close out position there. You gained 0.2% gain. Or if you want to let it go again and then close it out there. And that would have given you a 0.8% gain in 18 hours of trade. A bit dicey, but that's how you basically play it. Now, because of this is still a very bullish move on the price chart on the daily, it's actually giving you a few sort of false signals potentially. So potentially, ideally, you want to see a move like this where both the price and the CCI on the upper time frame is very strong, in which case you'd get a lot more bullish moves generally during that upswing. So you can see there, if I zoom into any one of these periods, you can see there during this period here, you would have taken a long position there and you close it out when the CCI breaks into that moving average band. So in 15 hours of trade, you gained 1% in that range. So that would have been a nice little trade there. But again, notice as well, on the hourly, we had another bearish divergence. Lower lows on the CCI. So again, just be cautious here, because when you start seeing a divergence versus the price, then you've got to be careful about taking trades. Normally the CCI trends in the same direction as the price, and with the exception of these divergences. In this case, it's bearish divergence versus the price, and it eventually did break to the downside, hit our minimum target there. But at the moment, where are we? Bearish, a very weak bearish signal on the daily, so taking bearish trades only on the 1 hour time frame, and again, be cautious and very tight stop losses if you want to put it above the moving average range. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.